Hi everyone, I'm here to take you through our macro dashboard. We have a macro dashboard which we publish monthly through our website and also through our channel, which goes by the same name as our organization, Eastern Financiers. And we have been publishing it since November 2023. Now, this video is a small attempt to make you understand the macro dashboard a little better. Let's first understand what this macro dashboard is all about. This is, we are looking at the Indian economy. We are trying to find out how the economy has been doing. Basically, we are trying to judge the health of the Indian economy. So we have taken certain parameters which will which will give us a better idea of how the economy is doing over the months. This is a monthly publication, so month to month how it's changing, as well as it is the figures are compared year on year basis. Where it makes sense, it's month on month basis, just like in case of inflation, and where it makes sense, it's year on year basis, just like it is in case of the consumption figures. So basically, if we start with the macro dashboard, if you look at the topmost panel of it, we are saying what the trend is in August, vice versa how it has been in the previous month, that is July 2024. Majority of the indicators have remained in the green in July. So what are these indicators? These indicators are something which show us where the economy is heading. The very first line which says in August we are witnessing positive net system liquidity. Now, obviously, it will come to your mind what is this net system liquidity? It is nothing but a measurement of the cash and other liquid assets available to the banks. Now, how does it matter? It matters because the banks are the ones who will lend us money for consumption loans, for housing loans, for vehicle purchase, and for any other purchase of consumer products, long-term durable products. So if the banks are out of liquidity, they will not be able to lend us. Even if there is demand, will not be able to buy these things. But since this net system liquidity is in green and it is positive, it means the system has sufficient liquidity to help us carry out the transactions. Now, the very first parameter which is of interest to us is the retail inflation. We are all worried about how our money is doing. Why we look at inflation is because we want to know what is the value of money, how the value of money is either increasing or decreasing. When it's decreasing, we have inflation, and we are particularly interested in retail. As retail investors, we are interested in retail inflation. Retail inflation is something which affects our day-to-day expenses. Now, this headline inflation, which is also called the CPI or the Consumer Price Index or the retail inflation, it is about inflation of a basket of goods, which includes commodities like food and energy. Now, there's also something called the core inflation, which excludes food and energy prices while calculating inflation. Now, if we exclude the food and energy prices, the retail inflation has been a bit of has been a bit restrained, and it is at its lowest level since last 5 years. Now, part of this is because of the base effect. Base effect means the year from which we are comparing. If that has been high, so compared to that, the inflation will be high as well. Now, we want to look at the consumption side, how the economy is doing. A very healthy economy will always have growing consumption, lower levels of inflation, and our economy shows strength through consumption. We'll see that we have given figures of vehicle registration and vehicle sales. It is a consumption expenditure, and which gives us an idea how the consumption is picking up. We have been speaking, we'll see everywhere, everyone is speaking about the consumption growing in India. So vehicle sales is a good way of understanding how consumption is picking up. Job index is whether the economy is creating jobs. Now we our economy is strong, and we have seen job index growing this month also. There have been sufficient numbers of jobs, there have been strong numbers of jobs created. More jobs means more money to spend, and there will be higher consumption and demand. So, a couple of sectors which have been in front runner in creating jobs are pharma, biotech, and FMCG. Pharma biotech is led by uh, Baroda and Hyderabad, and FMCG lead position has been taken by Kolkata and Bangalore in employment generation. A very important parameter is the how much fund is being pumped into the stock market. That is something we are always interested in. So we here take both DII, that's domestic institution, and FII, foreign institutional investment funds. How much money these institutions have put in or have taken out of the market is also, it is also believed to be an indicator whether we have confidence in the Indian economy. So here we see that the domestic institutions have pumped in lesser amount of funds, but still they're in the positive, and FIIs are also regaining their confidence because the elections are over. They were a little shaky about the consistency of policy structure and all, but because the incumbent government has returned to power, so we are now over that uncertainty thing. So the foreign institutions are also returning to the Indian markets. So as long as they are putting in money, we can expect the market to move ahead, except for a bit of corrections here and there. And depending on the geopolitical situation, the Indian economy remains strong. So this is one of the key parameters which helps us to understand where the economy is headed. If you like this video, please like, share, and subscribe our channel, Eastern Financiers.